Good morning, everyone. It is 8 a.m. Chicago time on Thursday, the 29th of January, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Few interesting things going on today. We might go over our 15-minute period here, but not by much. I'll let you get back to your prep before the market opens. First piece of news, of course, is Apple's report yesterday. 3.06 came in at $3.06 versus $2.60 in earnings. Revenues of $74.6 billion versus $67.5 billion expected. Gross margins at 38.5. Apple currently has $170 billion in cash reserves. They can buy a whole bunch of companies with just their cash reserves. It's incredible. New Zealand Central Bank, the Reserve Bank of New Zealand, left its official cash rate unchanged at 3.5%. Remember, this bank was beginning to tighten, and now they've stalled and they're sitting sideways. Replaces tightening bias with neutral one. Very, very important to note that we've changed gears. The global economy was starting to kind of turn with Europe lagging, and tightening was on deck, starting with the UK as the largest potential, or the key G7 member who would start. New Zealand was already on its way to tightening, and now everybody's got into neutral, with some countries actually reducing their rates, some central banks reducing their rates. So we're in a stallflation is where we are, and it's important to note that. And that ties in with the Fed announcement yesterday at 1 p.m. Central. The Fed states that they're going to stay patient, but it references international developments has provided an additional angle to its outlook. So the Fed is now is basically saying, "Oh, we'll stay put. We're looking at international development." So that adds another angle as to whether or not interest rates go up or what the state of our economy is. As you saw, the market sold off shortly after that. There's an additional measure of uncertainty there. It's not clean and clear, but it's there. This morning, the South African Central Bank left interest rates unchanged at 5.75% as expected. And then, of course, a half hour ago we had initial jobless claims coming in at 265,000 versus 300,000 expected. This is the lowest initial claims number since April of 2000. Very important to note. Continuing claims at 2.385 million versus 2.405 expected. Looking ahead at what's on deck for today, 9 a.m. Central, half hour after the open, we have U.S. December pending home sales expecting 0.5%. Natural gas comes in an hour after the open at 9:30. Weekly EIA natural gas. At 10:30, we have ECB's Kerr on panel in Milan. Interested in what the ECB has to say. At 10:30, also we have the Treasury to sell 35 billion in 5-year notes. At noon, the Treasury selling 29 billion in 70-year notes. And then this evening, we get the jobless rate in Japan, as well as the CPI year-on-year number for Japan, expected at 2.3%. Other than that, this evening, the UK gets consumer confidence at about 1 a.m. It comes out at 6 p.m. Central Time, 7 Eastern. And then after the close today, we have Google, Amazon, and Visa announcing. Look for those. Let's switch gears. I'm going to start you off with a composite for the ES. Actually, let's start with the fundamentals, with the fundamental chart. There we go. Hopefully this is clear. The top pane has the S&P cash index. You can see here we've been snaking around in this balance zone for quite some time. This is why I'm using that big red composite that you've seen before. A very interesting formation given yesterday's action, but clearly the market's imbalanced. It's not able to push highs or lows, significant highs or lows. The last key high we put in was during that volatile trading period of October, with October 15th being the low. But since then, nothing really has happened. You can see the large spike in new 52-week lows on New York Stock Exchange, and it's been pretty quiet since then. The interesting thing to note is yesterday's range expanded quite a bit to the downside, yet 52-week highs continue to make new highs. This line keeps going up. A slight uptick on the New York Stock Exchange 52-week lows. I think this is speaking of divergence here. Even though we've sold off, we need to be cautious on over-interpreting that. Same with the put-call ratio. Put-call ratio should have gone up yesterday given the action and the volatility on that sell-off. And here it is right in the 1 sigma zone, or the normal range. This light color here is the normal range for the put-call ratio on the board of trade. And that tells me that there really wasn't much behind that sell-off. And it was an interesting sell-off. It had some pretty decent bounces. It wasn't as aggressive as you would expect. In fact, most of the sell-off, as I'll go over in a minute here, I find it really interesting. Most of the sell-off didn't do any damage at all to the auction so far, and until later in the session, when it looked like short-term traders were basically the longs, the short-term longs, were being squeezed out. The bottom pane here has the key indices, the key sectors in the S&P 500, healthcare. We have healthcare, consumer discretionary, the XLY, techs, industrials, and financials. And I'm tracking these just to see how they respond. Since the start of this run-up, healthcare has been the strongest and continues to be strong. It is really, it has been pushing new highs with every balance attempt on the S&P index. The healthcare sector has been pushing new highs. The consumer discretionaries have been sideways, and with techs, industrials, and financials kind of taking a hit. But overall, we have a mixed bag here, and I'll be cautious to get overzealous on the short side today. The move here was impulsive. You can see here. This is a 60-minute bar chart, day session only. It was an impulsive move, so the expectation was for it to test lower overnight and probably in the session at some point. The overnight high is at 2003. If we look at the overnight action, fighting a cold, so I'm all nasally. If you look at the overnight action, it's pretty balanced given the extent of the selling that came in to the close. We did get the lower low at 87.75. 87.75 has been a number that's been we've been carrying forward for a while. It used to be an all-time high, and we've tested it several times. I'll show you where that comes from. But overall, pretty balanced profile. It's got 2 prongs on it. It's not quite a double distribution, but overall, the overnight profile is pretty balanced, which is kind of odd for the kind of selling that we had. I'm just seeing a very, very strange behavior here, with balance being the key theme I wish to leave you with. So don't get overzealous. Yes, there's a higher probability now of getting that correction down to our key target of 56.25. The big number that has yet to be tested in this auction is 1956.25. 1956.25 represents an extension, a measured move extension down, as well as the next key high volume node on the composite. You can see it here peeking out. We still have some gaps below and some uncleanly auctioned areas below that we left behind on that last sell-off. We popped up and we've left a lot of unauctioned areas or not fully auctioned areas below. So I wouldn't be surprised if it sells off. However, I'm still holding on to the theme that this 2088.75 is likely to go, and we're still in balance. On the price action front, I have this trend line here that's been sitting here. I've had it invisible, but I've turned it on. I just try to declutter this chart, but I've put it on back on here to show that we almost got to the edge of this this line yesterday, and the overnight low is right on top of this line at 1987.75. It's right there to the tick. But if you look back a little bit, the big gap that I've been using for the MCs from 1031, and the high before that's 87 quarter. Once we made the gap and we pulled back, we went to 88 and a quarter. So what we have here is a very big low volume node, and then we traded through it, but the and then had some volume building at 87. But overall, we've had a hard time holding on to this area, the 87. So if you draw a line through 87, 87.50. You'll see the market kind of trades through it, and if I take a look at these profiles, you'll find that there's a kind of they slip through that price. So that's another area. That's another reason why 87.50 is something I'm kind of watching for today. It is the overnight low, 87.75. So that's where we are right now overall until the sell-off yesterday busted through the 2000. It wasn't doing any damage. In fact, in the stage 5 chat room, that's what I was saying. I was basically saying that I was telling folks, let's not get too excited on the selling here. It hasn't done much. All it did yesterday was move from one LVN to the next, and then on the close, it slipped through and onto the next HVN at 95, which was a level that I had listed as to watch for the week, and it pushed through it by 4 points. And then we had the overnight bounce. So overall, my point, just there's an elevated probability of a test lower. We're almost creating a weak low here. But overall, as far as doing damage, sellers doing damage to the buyers or to the auction, we're not anywhere close to doing damage. We're still transitioning from what is now the point of control of this area, which is at 2028. We've transitioned from there to the next high volume node, and now we're stuck in the lower high volume node with the edge of it being around 87, 85. And that's where we are. I do expect the market to make a lower low today to complete this rotation, this impulsive rotation down. But I don't expect too much on the sell side. The first target below remains at 1980, the point of control, and the key high volume node there, and then the extended target and the big target's 56 and a quarter. So my primary hypothesis for today, switch charts. My primary hypothesis for today is for the market to open kind of choppy. We're in the high volume node from yesterday, the lower high volume node, open choppy, but I do expect 91 and a quarter to be taken out at some point for a test. Given that it's balance, I want you to understand the context here. Given that it's balance, it could just as easily find buyers who are trading a reversion to the mean type of method. You could find big players just pushing higher as the point of control remains at 2023 from yesterday. Our point of control yesterday is in line with the prior day's point of control. Again, even though this has sold off, and that's what makes it interesting, it still remains in balance. I want you to keep that in mind. But you know, this is all about time frames. So when I'm speaking, you have to always ask the question, well, what time frame are we dealing with here? And the intermediate time frame shows it's likely to make a lower low. The short-term time frame shows that it's probably going to chop around in the morning until the intermediate kicks in. But overall, the big picture, the bigger picture, the multi-day or couple-week picture is that it's still imbalanced. So there's a lot to process here, I understand, but this is where we stand right now. Looking at Europe real quick, the Euro stocks. So as indicated yesterday, they started to poke through on the low side here. I'd extended the profile over and have come back in. And what I had mentioned yesterday is that it was likely going to test this low volume node going down into the 33.13. We're at 33.09 on the low. So we have come into the we've tested the value high of this trend day profile. Value on a trend day is not a firm indication of anything, but it did fill in this low volume node. Last chart I want to show you. This is a daily profile chart, and what I've done here is I've essentially merged the days together that are in balance, which are 3 days over here and a bunch of days over here, starting with the beginning of the month, just to get a picture of what is going on overall. The value of this merged profile goes down to 88 even. Remember this morning's low is 87.75, so one tick beyond that. But again, this is just another way of seeing that all we're doing is compressing. We're still compressing. Don't get carried away with the sell-off yesterday. Yes, we had expanded range and somewhat expanded volume. Volume was not as strong as you would expect. Per point covered, the volume was actually lower than normal. So if you take the total number of points covered in a day divided by the amount of volume, you'll find that the volume per point was fairly low for a sell day. Another metric to watch. Anyway, so again, here we have expansion on the range. This is a range bar. This is a volume bar. And we have expansion on the range, but the volume's kind of meh. We have, over the last couple months, we have confronted these big sell days. You can see here a big sell day, just similar to yesterday's 48.25 points. Yesterday's was 47.5. Next day, boom, buyers. So when I go back in time and look at these big sell days, here's another sell day, 50 points. Okay, the next day, boom, buyers. This is balance. This is what we expect in balance, and this is where the market is right now. As you look at this picture, it's completely imbalanced and just snaking around itself, with 2028 being the key level to watch at this point. I'll leave you with that thought, and good luck. Watch your risk, and we'll catch you tomorrow. Take care.